Alright, hey, how's it going, guys? Welcome back to the MentorFX Private Mentorship. This is webinar 153. So I'm going to kind of jump right into it, but before I do, as a lot of you saw in the announcements just on Friday/Saturday, I sent out a little message asking you guys to leave some of your honest reviews, just because a lot of the people that tend to leave reviews are not always the people that really enjoy a service. It's usually the opposite. If you've ever been to a restaurant or something, it's the same thing, right? Someone that had an excellent time at a restaurant doesn't really leave reviews about that. It's usually people that have a terrible time. So I just want to start this off by saying, thank you to all of you that have left a review. Well, actually, most importantly, thank you to all of you that make kind of MentorFX, the space here, the people that come here, one of the best places to be, right? The reason that the mentorship exists at a level that it does, even though, the content is very good, the tools are very, very good, is because there's people like yourselves who show up every week, who are committed to their own process, who are committed to also helping others that actually want help, right? This place exists and exists at such a high level because of you, because of all of you. So before we even get started today, I just want to thank you all, just for my personal self, for making this community what it is. And I just want to start the webinar off on that note today, okay? So thank you guys for leaving that. And again, if you're watching this and you haven't yet, leave a quick review, even if it's a word. It just means a fuck ton. It goes a very far way, and it improves the entire space here for yourself and for future members, which is a very important thing, because the goal is to grow this to and put eyes on it from people that actually want to continuously get better at what they do. So grateful to have everybody on today. What's up, guys? Just reading through the chat really quick, just saying hi to everyone. What's up? Good morning. Sarah, Atholay, Shellings, Peace Pod, Dan, Amka, or Milas, Kevin, Ample, JP. What's up, guys? Good to see everybody here. Good morning to everybody. Good morning. If you sneeze, you got me? All right, thank you. Looking to an auto vaccine, did it this year, counter my pollen allergies. Oh, sounds good. Sounds very good. Yeah, I just drink tea, so maybe that'll help us. Okay, so we're gonna try to jump right into this week, okay? This has been a tremendous week. It's been an absolutely beautiful one. The delivery has been close to perfection. I'm going to quickly demonstrate what I mean by it's been close to perfection. Okay, cool. So beginning of the week, I just want to bring this to everyone's attention today. Now, again, we do this every single week. We do this every single month. Also, before we even get started, I want to welcome every new member. So if you're new, it's very good that you've shown up today. You are doing the right thing. And also, if you're new, this is your message. Write this down wherever you want, that you should watch the most recent 10 to 20 webinars that have been released, because again, it is almost a better course than the course itself. Seeing the most recent 10 to 20, including this one today, is a very good gauge into what you're working towards, into what we do every single week, and to proof that everything we do, has a reasoning behind it. So you learn a lot faster by seeing it actively done, and by watching 10 to 20 webinars, you're actively seeing over 6 months to 12 months of pure action being described, just like that, which is very powerful. Now, nonetheless, let's get right into it. So at the very, very start of the week, beautifully enough, I sent out this little outlook, okay? And again, this happens close to every month that we do this, but some months are much better than others, and some weeks are even crazier than others, right? I sent out this little thing right here. You can take a look at the date if you guys want to. You can go back and go find this, all the fun stuff that comes with that. But I sent out this outlook, right? I had an expectation that we'd likely see gold base around, likely start to move higher, probably over the MAs, go sideways for a bit to produce a potential entry here or on lower time frames, go higher, produce another MB or entries or opportunities upper within these areas, and continue moving higher into our stage 2 to deliver into these little price areas here. So this 23.92 to 24.16. This was kind of the very start of the week and the expectation of it. Now I'm going to actually break down this even further. Actually, I'll do it right now. No, I'll do it in a second. About why we were expecting this. This was simply to do with stages, and we'll talk about why this was the price target, whatever you want to call it, that we had in mind for delivery, and then hopefully onwards. Now, That same day, this is May 13th, that same day I released a follow-up, literally right after, to show you an idea about what actually happens in my mind when I look at any market. How do I expect things? What do I look for? And why is it that I'm able to consistently predict prices and then when they start delivering, get involved within them? Well, it's because I have set principles behind what price needs to do. This will also be covered within cycles, as I call them, within the remastered stuff that I'm still working on. But you can see I kind of even drew in what I wanted the MAs to do. So let's go over this very quickly again. There's that same kind of basing, same kind of sideways, which would be a stage 1. You'd see a stage 2 expand, oftentimes through the MAs, right? So the MAs probably would find themselves getting closer together. Price would expand above them. Price would likely bounce off of them and create an ICI entry or opportunity for lower timeframes to start scaling into new stage 2s. A new stage 2 would start and move higher. It would then go sideways, likely to the MAs or just over the MAs, and then continue going higher into a stage 2. So these would be fractals 1s, 2, 1, 2. Let me actually go like this. Let me disable annotations and go into my own annotations. So the expectancy this week was very simply, if I can find the tool, right, to have this kind of stage 1 into a stage 2, a stage 1 just at the MAs, fractal stage 2, a stage 1 just at or above the MAs into a stage 2 that would have delivered into these prices around here, which we'll talk about why in a second, but they're to do with these higher time frame expectations of delivery, to simply deliver into there. And we'll go over all that in a second. But this is what I kind of sent out. You know, this expectation of what the MAs would do, how price would play in or around these MAs, and how it would then accumulate to the top side. Now we get to the actual week, kind of in review. Right? So as we look at the week in review, a few things might become apparent to you. If I go ahead and kind of try to draw it out as best as I can, this is where I drew out this guy here. You can see the MA drawings are still there. Price would pop over the MAs, likely find some kind of ICI or lower time from entry there. Start moving higher, either make an MB here or move higher. Make a longer term MB here, move higher. Find a longer term MB through the tops and move even higher up into these areas here. And again, as I kind of compare these two side by side, a lot of you should be able to look at this and say, huh, weirdly enough, the delivery was close to perfection, right? Like, it literally doesn't really, I mean, you guys should be able to look at this and see that there is close to no difference in the expectation versus what actually had occurred. Now, this doesn't happen because, you know, I'm a fucking wizard or whatever it might be. This happens because I've just simply put a few rules together, put a few tools together, and have expectations within how the tools or the rules are going to move in expectation with how it's going to provide me entries. And I simply watch every week, watch every day for that given expectation to deliver. And in the scenario that it's delivering, I get involved on that market, right? And this all came from the exact same thing that we spoke about the week before, the week prior to that one, the week prior to that one, and the same exact tools that we've used over and over and over again. One of which, as you guys all know, is the MentFX screener, right? As we head over here to the MentFX screener, a lot of you know since last week, since the week before, the week before, the week before, Gold has been showing us a very, very clear story regarding what it wanted to do. Now, this is without any added things on the, you know, this is without any added things to the screener. This is without anything else except for just the models. And Gold has been showing us extremely clearly, for the most part, where it's wanted to head. So fast forward back to the start of the week last week and the webinars that had to deal with the weeks before. Let's actually go like this. So this was Monday. Oh, there's the sneeze. Yep. And this was the previous Sunday. Okay. So, okay, my ears are literally dying now. But if we go ahead and take a look at this, right? This is where we were 2 weeks ago. So this was webinar. So this is what's cool. You can look at the date here and see it's the 3rd of May. So if we look at our calendar and we look at the 3rd of May, that means it was the 5th of May Sunday. And what's cool is if I just simply jump in here and go up to the 5th of May, which is right here, webinar 151, and you go ahead and open it. This is something that a lot of you should do, but also something that a lot of you will see for yourself live. And you can go ahead and watch this and find points that we start to talk about, something like gold. Okay, and we start looking at gold and start expecting certain moves within it. You will see the same things discussed over and over and over again, and why we're watching it and all the stuff that comes with that. So it's a really cool thing because you can go back and actually see this happen live for yourself before it ever occurred. But very simply, around this time right here, all we had on gold on a higher time frame was this longer term stage one. So I'm going to actually show you guys that right now from a standpoint of how do I analyze markets from simple stages, right? You have this longer term stage one that happened here. Price started multiple lower time frame stage ones into twos that failed, right? Stage ones into twos, stage ones into twos that began to deliver, stage ones into twos, ones into twos that began to deliver. So this is the price action that all of us traded a few months ago, actually, from around February up until April. Then you had price go into this longer term stage one, which is what we're in right now, actually. This is a stage one that was happening on a higher time frame, and within that, again, we had fractals begin to set up, but nothing had proven that price wanted to make a move just yet. Then on lower time frames, we were able to see that this stage one into stage two was likely to start, and it did. That given week, this was a week before this last one, this occurred until we got to Friday of last week, which was right here. This was literally the opening of Monday. And from here, we spoke about the exact same thing. We expected price to start a lower term stage one and start a stage two to deliver higher into likely, again, if we compare normal stage two, so if we look at this thing right here as a stage two and just kind of compare stage two, stage two, on average, this thing is going to deliver a stage two around this size almost always. So if we took a look at this, right, you can see where these predictionary prices or these predictionary measures for where price was going to go likely this week came from. We expected these fractal stage ones and twos to deliver up into these highs. We expect them to deliver at least minimum this week into this area here. And from there, based on how you are positioned, it would allow for you to continue managing a position higher. So a lot of the traders within our mentorship that got involved 2 weeks ago here were able to take this thing significantly higher and are probably still in it. Similarly, the people that got involved this week inside of here that are positioned and still in this thing are likely positioned to keep on taking this thing a lot higher, right? And that's where that original plan for seeing price deliver on gold at least came from, right? It had a very clear set, where is it? It had a very clear context that was set behind it, which is that it wanted to be accumulated, it wanted to move significantly higher, and then we went ahead and applied the actual analysis to it, and that was that price wanted to keep moving higher. Prices were delivering in a very clear way. So came the beginning of last week, where I sent out this beautiful image where I said, hey guys, the expectancy here is that prices are going to start another kind of cycle and start another stage one and two higher right around here. And up into these areas here, you're going to likely see delivery. Now, I know a lot of you that are in like the future space, maybe on the lower time from gold space, were able to take huge trades on this and take this higher, which is phenomenal, right? That is kind of what you want to do. You want to go ahead and study kind of the price action here, if you didn't study it yet, to understand what was made available to you. Because again, this is an example of a market that we've been watching with the team, that we've been expecting with the team, and that has now delivered. It might have not delivered beautifully, which is a very, very vital aspect because, hey, you can see even here, I didn't trade all of this, right? I even missed the trade right here, which I would argue was very, very good. But it's the point that you can create expectations, and those expectations can be very, very true. And then if you get positioned, you can take that significantly higher using the exact same tools that you just saw me use on a higher time frame. So what I kind of want to do right now, just as a mini exercise, is ask you a question and then also show it. So let me go ahead and do this. There we go. Right. So the one thing that I kind of want to ask right now, as we do this right here, is okay. At the start of the week, you guys saw very clearly what I had expected out of this market. I'm gonna actually GC maybe gold futures. Yeah, so I mean, this is like the very, very easy photo, right? You have the accumulation model across time frames. This is almost like a little, you can take a screenshot of this if you want, or just remember this, pause this later. This is almost like a hand in hand what you want to see for you to take potential trades, right? You have the higher time frame stages delivering already, or they're there. Yeah, so Shizen took a quick image for us, which is perfect. Right, so you have a market that has proven, at least on some level, that the stages on the higher time frame want to deliver long. So that's already there, and you have that partnered with this screener right here. So those two things are already pointing to very, very clear things that are going to occur. Let's put it that way. Then you have price on this given time frame or on a lower time frame, a validation time frame, start to break higher and move higher. showing you accumulation, right? Showing you that money's coming in. Some kind of institutional structure is being created, and the expectation is that prices want to continue delivering. And from there, you have basically the simple expectation that, hey, you're going to start a new stage 1 and stage 2 climb higher, something along these lines here, within your validation time frame or entry time frame, which means that as you get this longer term stage 1 here, and it becomes a stage 1, 2, stage 1, 2, stage 1, 2, stage 1, 2, even as I draw it, you should be able to see how I predicted this little red path, right? Then you have an expectancy for the upcoming week. Now, based on the timeframes you trade, it will change the kind of performance you might have in any given week. So for instance, let me delete everything here. For instance, if you had the understanding this upcoming week that this was going to be a stage 1 and the 2, 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 etc. Stage 1 into 2, stage 1 into 2, and you can view this one almost as a higher time frame one. So let me actually save this. And then we can make a higher time frame one like this. Okay. So when I do this, and then I'll actually draw it in a little bit further, so something like this. Okay, great. Because this is honestly what we were looking at this week. This was my only expectation in regards to stages, and all I did is I drew out the expectancy of the fractals. So now, if I took this to the next level and said, hey, all of you lower time frame traders, do you think there are entries? And all I'm going to do now is, without even adding anything else, I'm going to draw mini ovals around the stage 1s. Do you think that you would have opportunities for lower time frame entries in any of these areas here? Basically, is the way I kind of think about it, right? You can go even lower as well if you want. You can do all the stage 1s. But the answer is, of course, right? These are where your entries are going to be created. This is literally where they come from. And notice how it's happening across kind of every time frame. There's no one time frame that's deciding that this is the market you should follow and that it's really, really clean. It's the fact that the market has shown you, or the screener has shown you, what the market wants to do. It's showing you how the orders are entering into this market in general. You've also analyzed the price action to prove that same thing to yourself. You have an expectancy of that upcoming week in terms of what's going to happen on this market. Okay, and as a result, you begin to follow it. And again, you get opportunities that are going to be created on lower timeframes as a result. And then you can scale down to your given time frame of entry, even if it's a 1 minute or even a lower time frame. I'm using 1 minute here because some of you only have access to the 1 minute. And you can find all the available opportunities within it and screenshot them and understand the rules that led up to following them, right? What were the rules that allowed you to have trades within them? I'm going to go to 5 minutes because there's a lot of action here. But again, you would go into this and say, okay, what was truly made available to me as potential entries within this price action, right? What would be something that I'd be willing to take, and how could it have played out? Right? You could start as simply as just drawing out highs, inside highs, and just doing that over and over again. Just drawing out any high you see like this and drawing it out in time, right? Coming back, finding moves that actually start large markups, and finding the highs that would have created opportunities by which you could have gotten involved and nothing, and basically would have taken off with you and then left you in big profits, and taken images of those. Now, as I'm doing this idea, concept, goes hand in hand with the most recent, privately made available to all of you guys, context clues. This one right here. So I highly recommend that after this video, at least minimum, you go and check this one out, because this was a member who personally was a little bit frustrated, a little bit confused, it has issues because he's worked through the course, but the course doesn't mean that he can actually execute. No shit. So it's causing a little bit of frustration. Now you're going to see the kind of steps you want to take as a first timer in terms of determining the kind of price action that's even worth trading. In terms of determining what moment should I even consider of looking for trades. These are the steps by which you want to kind of approach that. It's very, very helpful. So I expect and ask that you guys check that out. Okay. But nonetheless, this was absolute perfection in terms of delivery. This is what we were looking for, and that's how price delivered. Now, even though it delivered, and this is kind of the start of today's discussion, even though it delivered, did I take a fuck ton of RR out of this market? Did I get to take this market and trade it from here all the way up into its new highs? Right? The answer is no. I got into 2 trades, one of which got stopped out at break even, the other one that made a little bit of money right here. And then I missed the rest of the week. I didn't get to take this from the low to the high. I didn't get to take this from here to here. I didn't even get to take it from here to here. Like, I even missed this trade right here. This was actually a perfection trade right here. Like, perfect. Like, this is the kind of trade I want to try to take always, and I just missed it. This was what? Yeah, Friday. So this was literally on Friday before the end of the day. So whether you protect like this or just a little bit deeper, right? This is the exact kind of move that I personally look for to get my edge, to take my money out and then run with it. I didn't get that, right? I got to get involved and then got to sit on the sideline as nothing else happened, and that's fine. That's a big part of the game, right? You're going to get analysis correct. The thing that's going to become an issue for you isn't trying to be correct about a market, because what's funny is here you're going to learn how to actually have the ability to be correct about a market. But the problem now that you're going to face is, hey, I actually know when a market is trending. I actually understand how a market delivers. The problem now is that, damn, these markets run truly without me. Not I'm right about the bearish and the bullish and the bearish and the bullish, and I'm always predicting every single direction. Now it's going to be, I understand when a market is ready to make a pop or a big move, but it just sucks because I'm not always able to be in it. And that, my friends, is a phenomenal problem to have. If you get to the point where you understand what a trending market can look like and does look like across timeframes, and kind of know when a market's going to be ready to make an explosive move or continue moving or continue trending, and your only problem now is, fuck, I got to get positioned, that is a phenomenal problem to have. That is the kind of problem that many people that have taken, 3-5 years in this entire market are still trying to figure out, right? Most traders, as a lot of you might know, especially because I've been there, so it's likely that you've been there or you are there, many traders operate still under this approach, where they look at a market and they say, okay, what's that market doing and what's the next move? And at this point right here, the expectation in their mind, even though they don't know this, but it is their expectation, is that, hey, this market can do this, or it can do this, okay? And this is a huge problem by already approaching markets like this. So now, no matter what they draw on, no matter how they draw things, no matter what zones they use, no matter what, are they going to be correct or wrong at the end of the week? Every single trader, most traders in the world that operate like this, because they do operate like this, you know what's funny? Every single one of them at the end of the week is going to be correct. Okay? That's it. Most traders, by the end of every given week, are correct about the direction, because in their minds, they just plot anything and everything and expect both directions. So when it happens, they're correct. Now, do you think them being correct is now met with profit gained or trades taken within that direction? Or do you think it's almost always based on them never getting positioned? Now is where you start to see the very, very classic issue of the all direction approach, right? At the end of every single one of these weeks, no trader that had this kind of expectation is actually positioned properly. They were positioning long and long and long, and then short and short and short, and they were chopped out or stopped out before any given move happened. And even if they were in a move, they were out of it here to get into a new move. So again, the analysis doesn't matter too much, right? Unless you understand what you're already looking for. Now, it's a very big difference to have this kind of expectation. So this is the very, like, almost one of the biggest problems with trading. It's that a lot of traders actually are correct, right? Because they actually position themselves, or they expect analysis in a way that they're going to be correct no matter what. Theoretically, even I personally am correct every single week, right? Because either price does exactly what I want, or I don't get positioned, right? But the difference is that these traders are positioning themselves on every single trade in every single market at all times. So this week, when I expected price to hopefully make an accumulation out of this, bounce, maybe bounce again, start an ICI, move higher, start a sideways move, and then go higher, right? Do I have one or multiple expectations about the market for my upcoming week, or for this upcoming week before the week even started? Do I have one or multiple? Yes, I have one expectation. And very simply, the one expectation I have is that price wants to move bullish. and this is how it may want to move bullish. That's it. So in the scenario that price doesn't give me the opportunities that I'm looking for, I'm walking the fuck away. There's not a single thing that I can do about this market, right? Sorry. If the market fails, it fails. Now, if you come from the background that a lot of other traders come from, and the market this week did deliver something like this even, and cleared out all these lows, let's say that, what do you think every single one of those traders are now worried about? Are they worried about the fact that they, followed rules that potentially got them involved, or are they now thinking about how could I have followed this move? Every single one of them want to follow this move. So they start to create expectations and create strategies around basically being wrong in the long term, right? Which is why all of us, at least from what I want you guys to recognize, create context around the systems and the markets that we want to trade, and then we follow them. And there's nothing more to them, right? We look for that expectancy. We find things that are very, very clear and things that want to deliver, and then we follow them. So that brings me into one of the things I saw this week that I want to bring up right now. And this is an issue that I see a lot of traders deal with, and maybe you deal with it too. So let's talk about it. So we had a member message a little something here, and to simplify it, basically, he said, hey, Anton, I'm looking at Euro US dollar. Something that a lot of you should know, I haven't watched for a few months now. But he's looking at it, and he said very simply, the higher time frame made 2 bearish MBs, so I technically want to be bearish. A lower time frame made multiple bullish MBs, so it's telling me to be bullish. I'm getting very confused about what I should do with price. I'm very confused about what directions I should trade. What should I do? Please help me. Right? And again, this is a huge issue. Huge. And it goes hand in hand with this analysis here, where no matter what, you're going to be correct. Guess what? Because one of these zones might hold and it might go bullish. One of these zones might hold and it'll go bearish. So you end up correct, but you end up with no money traded or with money lost. And the reason for that is because you're looking at something that is consistently clashing. It's hard to understand that a normal trader, so someone that like myself, or a profitable trader like myself, or Dan or King, or anyone here that's a profitable trader, it's hard to understand that they would look at a market like this, and in their heart of hearts, in their brain, the only thing they think is, I have no clue what this market wants to do. That's all. That's the only belief there. When I look at this market, Euro US dollar, in my heart of hearts, as a mentor, as someone that studies the market with more than 20,000 hours and knows everything about the market, when I look at this, the only thing my brain says is, I have no clue what this market wants to do. And that, my friends, is the power of profitable trading. If you look at a market and your first expectancy on something that is confusing is not, hey, this is confusing, I'm looking away from it, but instead your first expectation is, okay, it's confusing, but I can force something, then guess what? You have fallen into the exact same brain criteria as someone that has been stuck or is stuck and has been stuck for a very, very long time. Because all you're doing now as a trader is you are forcing a market condition or forcing a trade into some market that has not proven that money or orders are coming in such a way that the expectation of delivery is highly probabilistic, right? Which again, like Chris says right here, leads us back to the exact thing I've spoken about over and over and over again. We're not here to be correct about the market. We're here to make money. So when I look at something like this, I don't care about telling this member that it's likely bearish, because it is. All I care about telling that member is, I have no fucking clue how to execute my edge on this market. So why would I even try? That in itself is its own edge. So kind of like what I wrote to this guy is, listen, I do not trade the counter trend just because it's doing something. I look at the screener and then the market. If I'm not if it's still the same, I'm not going to trade it. Then I said the confusion is mainly coming from trying to force a trade or a direction when not much is aligned. So this is where most traders are. They get on any given day. Oh, let me see what NQ, NASDAQ is cooking today. There's highs here and lows here. I think it could take out those highs and take out those lows, or take out those lows and then take out those highs. Here I go. They throw out the understanding of context. They throw out any understanding of what is actually happening with this market, and they go for the instant pattern. And the second they do that, they're always at the end of the day going to end up correct because it goes in one of those directions, but they always at the end of every day don't make money, right? Unless it's a random profit. So, you know, so what I told him, you know, kind of in regards to this is, hey, understanding, as you kind of did in your own message, that it's as simple as saying, this market is not clear, I'm walking away, is the exact kind of action that will make you profitable. The thing that makes you profitable isn't the ability to look at anything and analyze it. Okay, here it goes. I finally joined Anton's mentorship. Anton, what do you think about the VIX? Please tell me where the VIX is going so I can make money on it. Okay, buddy, here I go. It made a recent break to the downside. It's gonna make a change of character and go lower. It's like, this is not gonna teach you anything. All I have to do by looking at this is say, hey, this market has proven that it doesn't want to move in a clear trending way. Maybe on a lower time frame. No, it hasn't, right? It hasn't proven that it wants to move in a clear trending way. Maybe to the downside, actually. So I'm not going to look at it. That's as much analysis as I personally have to do to be correct about a market. It's not about predicting how good the next move is going to be or where the next move is going to go, because that's not what makes you a profitable trader. What makes you profitable is understanding where a market is likely to head, getting involved with pretty good defined risk, and then managing that risk to make you high-end profit. Let's put it that way. That's really it, right? So this is exactly what I kind of wanted to explain to this guy as we were looking at this, and it's the fact that being able to assume the unclarity of something and then walk away from it is a lot more important than trying to decide where that market's heading, right? When you look at this, before you even look at the market, they should be telling you, hey, you're likely going to be looking at a wonky market, a market that's being distributed while being accumulated, right? That's it. So when I head over to it, then I started looking at it and I say, okay, there's some bearishness to it. Let me see if there actually is. And I see it just kind of going sideways above the MAs instead of down below them. I'm already saying, what the fuck's going on here? This is in a longer term, like stage one. Maybe being accumulated, maybe being distributed. I have no idea. This is my honest truth, guys. Your mentor is looking at you right now going, I have no idea. Ready? Let's go and analyze it on a lower time frame. All right, it's in accumulation, clearly. But I have no idea where it's going because it doesn't make any sense in regards to the daily. Okay, but guys, it's your mentor. I got to figure it out. It's in accumulation, but I have no idea where it's going. In the short run, if you're trading a lower time frame, yeah, it can deliver this. But do I want to follow that? No, because I have no clue where the fuck it's going. Now, if you said last week, Anton, what do you think about gold? Something that has proven itself on the screener, something that has proven itself on a higher time frame, something that has proven itself before, something that is now currently in a clear stage 1 and 2 delivery and agreeing across multiple time frames, something that is currently in stage 1 and 2 over and over and over again and delivering to a high or to an area, and I look at you and I say, hey, this is a perfect market. Here's how it's going to deliver this week. And then it does. That is the kind of analysis you want to learn to do. Okay, this is really it. You want to learn to do the analysis that's going to get you positioned on something and make you money. You shouldn't care about the analysis on things that are not moving or doing anything, right? We are not here to be attached to one singular market. There is 0 point for that, right? We want to be UJ traders, okay? We want to be UJ traders when the market was in this condition here. This is the same condition gold was in, right? Stage 1 and the 2, then longer term stage 1, stage 1 and the 2, maybe it starts to move, but it doesn't. Stage 1 and 2, and we're off. This is the market we want to be in, right? Then we started ignoring it. Then it did it again. A longer term stage 1, accumulation, stage 1 and the 2, stage 1 and the 2, stage 1 and the 2. This is where we started getting position on UJ again. This is the market we want to be in. Then it failed down. Then it kind of got choppy for a while, it came up. Now it's in a longer term stage 1, as we expected. What do we want to see now? We want to see price start going into 1 and 2, to go into 1 and 2. And as it starts to make its way higher, and lower times begin to start agreeing with the price action, which at the moment you can see it's been ugly. It's been stuck in ranges. It's been kind of slobbering itself higher while making huge impulsive moves to the downside. Well, we ignore this thing until it becomes clearer, right? We ignore this thing until it becomes much clearer. Maybe it starts making new ranges somewhere up here, and then we start following it again to take it long, right? But until then, I simply walk away from the market, right? So kind of the main point of today's Webby, okay, is to discuss a little bit about the fact that you don't need to be trading shit movement. There's literally no point. You're asking to lose money if you're constantly trying to force moves on something that isn't moving in a clear way, right? And it doesn't make you a better trader to predict the movement of something shitty, right? If someone asked me about like probably GPAUD, something that is likely shitty right now, right? I'm not 100% sure, but yeah, likely shitty. Right, like whether they got this market correct or wrong, you haven't taught yourself anything, right? You have not found edge. You found a random zone that might have held. That's all you've done when you predict the market like this, right? On the other hand, the ability to look at something like silver, gold, NAS 500, right? XXX-JPY pairs or whatever else, NAS 100. Bitcoin even. Bitcoin's a little bit whatever, but the ability to look at those markets now as they're telling you to be looked at, right? Like silver. The ability to go over to silver and then say, okay, if I am to trade silver, oh my God, guys. This was last week. If I am to trade silver, how can I expect the movement of it so I can get involved in it and take this thing higher? That way, when the move begins, or when the stage one starts going and then starts to move higher, and even if you wait till the last possible moment, so if you make this even easier on yourself and you say, okay, going forward, you know, here was silver like last week. I'm not going to trade anything until price basically gets over the longer term stage one and maybe starts to make a stage one on a higher time frame. So here or here. If that's the points you wait for, even up here, do you think, based on the fact that it's a trending market, you're going to be able to get positioned? Yes or no? If you waited for either this or this. I'm going to drink some water. I mean, yeah, of course. Right? So, you know, by simply even going into like a Word document, if you're making your own like kind of trade plan and going, okay, you know, the first thing I'm going to look for no matter what, let me make this larger for everybody. You know, the first thing I'm looking for no matter what is screener alignment. So general screener alignment. And two is, you know, on my higher time frame, I want to see price prove, you know, bullishness. I'm going to do is prove bullishness and start a stage one on a rising MA, right? So this is where you'll now right? So if you just made this two simple rules, you'll probably improve your underlying results instantly, right? Because then if this is what you wait for every time, you already have the power of trend and money coming in behind you, right? So then when you start to scale down to your hourly or your 30-minute or whatever the fuck you're trading, right? And you start watching price in these areas, 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 these areas, maybe here, up here, etc. You put yourself on the side of price that's just going to give you delivery, right? It's not always going to be clear, right? You can see there are wicks. This was actually a shittier week, right? In terms of how it delivered, right? Like if you look at all these wicks and stuff, these would probably stop you out of break even. Kind of like what happened to me on gold, right? I got my entries, but I got stopped out, right? You can see this. I got my entry, and then I got stopped out by these crazy like wicks. Yeah, I was right, but this will happen. There's nothing that stops this from happening, and that's fine. That's part of the rules that you live with, right? I got stopped out on both of them after getting a small partial on this guy as it delivered into the night. But yeah, I mean, like this is you want to program your brain to only look at things that actually deliver, right? You need to start asking yourself, what are the details of the delivering markets, rather than how do I look at any market and predict its move, right? There's no reason to predict any market at any given time. There's only a reason to predict something that is already proving itself. How well can you do on something that has money being pumped into it? That's the main question that you want to ask yourself and focus on, okay? So yeah. Mr. Onions, happy to have you on the team again, man. 9 months, beautiful. Shizen, you're good, bro. William says, I noticed a lot of 65-minute entries on Manufacturity. Are you using a 65-minute as one of your main entry timeframes now? Yep. Do you see yourself changing MA settings in the near future again, or sticking to these 4? I mean, the ones that really, really matter are like the 1020 or 921, like the faster moving ones. The 200 is just almost like a staple in terms of price should be above them. The 50 like doesn't matter. I think you can I can remove this one and it probably won't cause much of a change, but I just keep it on for now. I might change in the future. I have no idea. But again, the MAs are not there for the numbers. The MAs are there for the understanding of interaction of stage 1s and 2s, the interaction of orders coming in with the averages, right? Is honestly why they're there. So they'll probably stay the way they are for a while, I'm assuming, but yeah. The ICI system just doesn't fail to amaze me. I've been using it recently with the quick BE and management strat. Yep. The more you study like the ICI, or the more you study just kind of buy stopping a high, you start to realize what kind of opportunity it presents to you, right? And you can prove it to yourself within seconds, right? The way I kind of think about it is like if you were an Apple trader and you were fucking Warren Buffett and you're trading a 3-month chart, right? Ask yourself that same question, right? If you buy stop the high, could you be profitable? Okay, draw in a high, probably break even. Draw in a high, or you know, the high after a weak candle, so like almost like a CS or a CS. Draw it in, see what it looks like, right? Draw in a high out of a weak candle, or a high of a high. Draw in a high, or one at a weak candle, right? Because like it's like a CS. Draw in a high, 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 right? As you look at this, if you can imagine each one of these highs at the time of entering, so this one would be here, this one would be there. If you look at them, do most of these entries create an opportunity for the price to keep going no matter what, even if you broke even almost instantly? I mean, it should be easy. This is literally you doing the work. This is what you doing the work should look like. Yes, right? Buy stopping a high. So wait, actually, let me do this. If we're scientists, what is the general conclusion that we should make over buy stopping a certain high, or let's say a weak candle, so like a CS? What should be the conclusion that we draw about a market in terms of this entry criteria, right? Well, if you use this entry where you buy stop a high or a CS in a trending market, prices will keep you in the trend. That's it. That's it. That's it. You've drawn the conclusion. So now what should be your main focus if you want to trade this setup? Let me find the best possible way to identify a clear trend so that by the time I trade it, I can get in, I can manage, and then I can hold. Right? So then that brings us to the idea of what were the prerequisites for any single one of these trades to make money? Well, every entry happened above a rising 9 and 20. Every entry happened, for the most part, above a rising 9 and 20. Okay, great. We've now found a way to use MAs. Wow, we're geniuses. Number 2, at any one of these points, if we kind of just look back here, right? Price was in general accumulation, and then on time frames that were higher, price was in accumulation, moving higher. On other time frames higher, price was in accumulation, moving higher. On time frames lower, at the time, price was in accumulation or reaccumulation and moving higher. And a lot of these entries, funny enough, on lower time frames were what? They were MB buy stops, or they were after flush outs and ICI. After a flush out and ICI. So all of a sudden, within a few seconds, we've determined some rough rules that can help us identify good trades to keep us in trade, to keep us in markets over the long run. So theoretically, if we were trading this thing at the time, this should provide a valuable entry if we protect down the low and take it higher. right? Now, we don't know if that's going to be the case, but that should create one of those opportunities that then maybe create delivery. And oftentimes, if it starts moving, that should be enough for you to move to break even and likely succeed on the trade without having to do anything more. Now, I don't know if this one does, but we'll see, right? And you're in, right? Yeah. Right, we move to break even right here. Right, can anybody here, even if you're new, learn to buy stop a high? Right, like, yes. You know this is a way to buy over the last, at least on this pair, 40 years, that would make you money. Now, when would the times where you wouldn't make money on this be? Here's a weak candle. I mean, maybe this one actually goes to profit and then breaks you even. Maybe here, right? A little bit of chop. Let's identify what that looks like on a lower time frame. Is there something different about the MAs here versus the way the MAs look like here or here or here? Let's identify those things. And all of a sudden, you start to create a few rules that help you identify, when is a market not clear and when is it clear? What did the market look like here on a lower time frame? Right? Take a look at this. Does this price action, remember it, for a buy stop inside, take a look at it, exemplify the action you saw here? Does it look similar? Not at all. You're correct, right? The price action for this specific trade was that prices proved to already move. Prices went into a deeper flush, creating a longer term stage one. Prices popped out of a lower time frame stage one. Stage one just over the highs and took off. Now let's see if we can apply that same rule back here, right? Okay. Prices made a generally clear move. Prices started a longer term stage one. It flushed out, but it flushed out multiple times. And then it started maybe making a stage one or two. Now we're not sure. Now there's a lot of wicks and highs at or around this area. So should I be interested in trading here? Probably not. This is looking very different. And you start going through that. So then you wait for one of those points. Nothing happens. Nothing happens. And now you have that. You have price that has proven itself. So what is next based on our rules that we just created, basically? What should happen next? Just on the simple rules that we've done together. Price should, because it made a big move, it should make a nice flush out, right? Then it should likely make some kind of lower short-term stage one into a stage two. Probably stop and make a stage one that we can buy stop to go higher. That's it. Price flushes out. Very quick flush out, much bigger than what we're used to. We can do what? We can ignore it and wait for a new move. A new move starts, so we'll wait for a flush out. Price flushes out. Wait for a stage one. This is kind of a nice stage one and a stage two. So now if it goes sideways, could we buy stop it? So you get a little candle. This is an opportunity to potentially, if you want to buy stop, we'll wait for just the high, right? You get a high. Now again, in this case, it's higher than the high. So this is up to you, like rule-wise, but this is fine. This meets the theoretical rules of what we've seen work. And price goes, right? So already you can create very simple rules around catching trends by looking at some of the examples of what works, right? This is the way that I personally created these rules for myself. I followed this thing over and over again until, hey, this is what seems to make money. This is what seems to work on repeat. Why don't I follow that? Alex says, I spent a good few months testing an SSC strategy because I thought ICIs were too subjective. But recent webinars made things more clear, and I realized it's the multi-timeframe context that's key. Identifying the source of the trends across the EVC timeframes and following them. After a few days of collecting images, and I began to get a feeling of what I'm looking for across timeframes, and I'm excited to collect more data. It feels so much less subjective now. Exactly. Something is only subjective when you look at someone's personal strategy. That's it, right? Dan's strategy to me is going to look subjective. That's it. My strategy to you, before I try to explain things or showcase, the reasons that I might be taking something, is going to look very subjective. The second you get to actually looking at, the kind of the rules I'm using to identify every single market, it's always the same thing. It's always the same trade all of a sudden. So it becomes a lot easier to spot it. You said it caught that Friday move to pass phase 1 of my evaluation. Yep. And that's a really cool way to think about things too. It takes less than this move right here to pass a funded account or to make one trade worth 3 months of trading. That's all it takes. It's just you need to get to the point where you have identified the rules that are going to lead to trades like this, right? Golden says, I feel this. I often I FOMO'd into longs without following my system when I saw it running away. Got much stricter with the rules. Good. Very good. Very close to 1,000 trades. Already collected 830 trades. Yep, this is beautiful. Absolutely beautiful. Congratulations. We also had the same thing kind of happen with NASDAQ, right? NQ. Yeah, this thing delivered right up into the highs as well that we spoke about. You can see we kind of drew out the area we want to see stage 2 deliver to. All right, the exact same thing. You had price prove itself through multiple stage 1s and 2s. Again, prices move like this over and over again. Stage 1s and 2s. Over and over again. Stage 1s and 2s higher. Went into a deeper term stage 1. Fell down. Look at this move. Does this remind you of anything we just looked at a second ago? On a specific stock. Right? This looks exactly like Apple. In terms of what we look for, right? You get the flush out. You start building up. You make the ICI and ICI and you start to move higher. So you can expect these to create moves on a lower time frame to keep going up. That's it. That's all we're doing. Need to go. Thanks again for everything. No problem, man. I'll see you later. I watched that video maybe 15 times each. Every time it's giving me something new. Good. Hemel says, trading is unfair. Trading when you have an edge is just like cheating in a game. You only play when you know you can win and the other player have shown their cards. Yep, exactly. That's what trading is. Trading is understanding when everything is in your hand. Everything is showing you already what it wants to do, and you just have to allow that thing to now happen. That's it. And then you can get involved with that. It's unfair because you set the rules, right? You play the rules of the game. You literally set the rules of the game yourself. And imagine if you have the choice, right? This is almost like the blue pill, red pill. Here you go. Ready? Make your choice. 1, I will trade any market at any time in whatever direction I think it's going in now and hope it makes me good money. This is where 95% plus of people are. And some of them are still profitable, right? Your second choice is, I will find a few things that make a market likely to move. I will then only participate on the stuff that is likely to move. Right? You set your own game rules. There's nothing stopping you from choosing this. Nothing. Most people choose this though. Why? Because it makes timing a lot easier. You get on any day, hey, there's a trade available. You get on any day, I know at 9:30 a.m. there's going to be my trade. I will take it and clear out the highs and lows. Okay, right? There's nothing stopping you from choosing to, except for the lack of potential patience or lack of potential want to create edge, right? Imagine every time you took a trade, this was met, where everything was kind of in your direction, everything's kind of aligned, and all you have to do is get in and find out relatively quickly if that's going to pay you off or not. That sounds a lot smarter than me than just trying to guess and predict everything at any time. And when you get to a market that's complete dog shit and moving up and down and everywhere, and all week long, the only thing Euro US dollar has done is okay, maybe on the hourly, not bad, but imagine trading a market like this every single day and just hoping. hoping that your next trade is going to clear the correct lows or the correct highs or the correct lows or the correct highs or the correct imbalance, right? Or like whatever it is. Imagine getting on any given day and just being like, I will get my trade today. I will buy stop this high and make money. I will sell stop this low. I will buy stop this fucking high. I don't care, right? It doesn't make any sense. Why not allow a few things to align? Why not just give yourself the ability to let something align? Why not trade something that has literally told you, hey, there's a very specific direction within which I want to go, right? Hey, no matter how you look at me, right? Here I am on the weekly. I really want to go bullish. Hey, here I am on the daily. I really want to move bullish. Here I am on the 4 hour. I really want to go bullish. Hey, here I am on the 1 hour or your execution time frame. I really want to go bullish. Hey, here's me buy stopping a high, and here's me moving bullish. And here's me manage to break even and letting this thing do whatever it wants to do, right? What kind of rules of the game do you want to play by, right? It's the same thing as if I asked you, you guys have probably played Monopoly before, right? Imagine it was, hey, you can start with 0 properties and $0 and hope you get some dollars from the lucky cards or whatever, right? Or your other choice is you can start with 6 properties, $6,000, and you can roll first, right? If you had the choice of playing Monopoly either one of these ways, I mean, you would be an idiot not to choose this. Now, sadly, Monopoly has rules, right? It has rules already preset, and you have to play the game that way, or else it's literally cheating. The cool thing about trading, my friends, is that you can choose to do this on any level that you want, and it's not cheating. It's not cheating. You set your own rules. So why not trade when the rules are completely in your favor? The highest likelihood of winning can be made in your favor by your own choice. Why not set your own rules? By a higher time frame, you mean the EVC context time frame, like 5 hour or daily? Yep. Has he reviewed gold or NAS? So, I mean, sure, let's review gold. I mean, I kind of reviewed gold, but we can look at it again. Let's look at it through the future so I don't have to delete my shit. Right? Like, what were the rules that led up to trading this thing? Well, the rules to trading this thing started back here. Same thing as always. Right? The rules that led for me to trade it here started back here because price had proven itself. Because remember, there's a few things that we use to identify a market. Structure, models, stages, MAs. The market had proven itself already here. Back at this point right here, we started with this guy. And the first thing that gold told us is, hey, listen, I want to be accumulated. Now, at the time, if you guys remember, the daily was actually bearish. This was bearish right here, which is why we look at the market, right? When we started, this is where the market was. And when we started, this daily was bearish. So we went to the market itself, and we started to go through the steps. And we said, okay, what is this market showing us, even on this time frame, as we take a look at it? Well, one, even most recently, is that, hey, price made a very, very bullish push, institutionally bullish push, where the expectation now is that, hey, the likelihood is that it's going to continue this bullishness no matter what. That's number one. But that doesn't prove anything to us just yet, right? One is there, and structurally, price wants to move higher. It broke above any high that it was above anyway, made a very, very bullish push. So the expectation is that, hey, it could make a move higher. That's all we had. Models. The models were, across the time frames, bullish, with the exception of the daily, which we proved to ourselves as bullish by looking at this move right here. So again, all the analysis for this part here started back here. Then we look at the stages. This is when it starts moving into this, right? You have the stage 1, into a delivery of a stage 2, into this week where we had a stage 1 where we spoke about the fact that we'd see delivery likely in the upcoming weeks, into a very crazy stage 2 that we thought would take longer, but it didn't. It just delivered right up into a longer term stage 1, right? So price began to go into deeper or longer term stage 1 because, as you can see, it's not as short term as the guys down here, or down here, or down here. This is a longer term one, which means that it's likely going to be made up of new fractal stage 1s and 2s and lower time frame accumulations. So we can prove that, right? You had a lower time frame stage 1. This is where we started the expectation of a potentially bullish market, because guess what? This is still aligning. Nothing has changed here, and the market has only gotten even cleaner. The structure is still there, no matter how you kind of draw it, no matter how you look at it now. The price is telling you what it wants to do. So structurally, it still wants to move to a certain higher high. The models are even more aligned than they were before. Everything is now green at this point right here when we were looking at it. Here we are. And at that time, we were expecting a new stage 2 to start. Stage 2 into stage 1, stage 2 into stage 1, stage 2 into stage 1, and that's how we expected a certain high to be traded to, or certain highs to get traded to, which would be a completion of this stage 2. At which point you'd likely be too late to the market, so you might have to wait for a new, as a lot of you might expect for this week, a new stage 1. Where we can expect price to probably go sideways for a bit, let an MA catch up, and then take off again to make brand new highs up here, where the world will once again be confused and distraught and out of their minds that gold is at all-time new highs. Again, how did it do it? When the market's been telling you what it wants to do forever. So in comes this up this week right now, right, where the stages are arriving, the MAs are moving beautifully, everything is there, and the week starts. And as the week begins, once again, Monday comes along. This is Monday right here. Price has already, once again, moved into accumulation. Price has started a structural move higher, and the expectation that, you know, freshly wants to potentially move higher. And stage-wise, it hasn't done anything yet, actually, at the time. So that's when out came this image right here. Where is it? Out came this image right here. What do you see in terms of the expectation of the upcoming week? I want to see a stage 1 into a stage 2 higher. I want to see it stage 1, or ICI, or MB, into a stage higher. Stage 1 into a stage higher, and deliver to, likely, those highs. That's where this week came from. That's exactly the crazy analysis I used to predict gold in its entire direction. Now, that doesn't guarantee that you're going to get a trade, but it does guarantee that you know what needs to happen for you to get positioned, right? So then when you're trading this thing during the week and you're looking for reasons to get involved in this, the areas you start to focus on getting involved in this thing are likely in these lower time frame stage 1s as it comes to surf like these MAs, right? Comes to surf the MAs. Comes to surf the MAs. And likely you have the best possible entries that were available even on a lower time frame, probably this day as well, on this Friday. And again, this is where you would go in and kind of study what were the criteria available to you. Now, I could sit here and make up that I traded this thing right here. That would be so great, but I didn't. I missed this move, right? I just missed it. I wasn't home. I was literally out on Friday, so it is what it is. Or I went out Thursday night, but nonetheless, this move I missed. Right, but then you can go inside it and you can test what was made available to you. What kind of moves were made available and under what circumstances were those moves made available? So I think it was right inside of here. Delete everything to make it clear, right? And if you go back here and you just study what these moves were, what moves created opportunity for you. Now, as I look at it, I personally, even on a 1 minute, don't really see much in terms of here, what I could have traded. Maybe here, but this would have been break even. Maybe here, right? The only move I see that I possibly could have traded would possibly be here or through this high right here, right? So that would be like a mini triple M formation or through the high, right? Those are the only moves I see. And those ones, it looks like would have made a delivery, or maybe even up here. Yeah, somewhere inside of here or here, maybe here, maybe here, right? All these are potential 1 minute entries. Now, I didn't trade any of these, of course not, but these are the kind of moves that you would then go back and study and see, hey, what moves were made available, right? Because this is a market that we've predicted forever, and look at where those moves would have taken place. And this makes a lot of sense in terms of the fact that you had your stage 1 and the 2, 1 and the 2. What's happening here repeated here. This is the expectancy I had, right? 1 and the 2, 1 and the 2, 1 and the 2. That was my expectancy. It delivered shitty. Then it delivered beautifully. 1 and the 2, 1 and the 2, and now, if a lot of you might be able to guess, the guess or the likelihood of this next move is 1 to 2. Right? So at the start of this week, maybe probably by Monday or Tuesday, you're likely going to see price deliver up into like the 2440s, 2439, 2440, 2439, 2449, whatever, 2450. I don't care what numbers you use, right? But that's how prices are likely going to deliver. So those lower time frame traders are probably going to look for ways to get positioned on this move higher, because everything's aligned right now for a move. Nothing's stopping this thing from making this move here, right here, right? Same thing happened back here. 1 and the 2, 1 and the 2, 1 into 2, fail down. 1 and the 2, 1 and the 2, 1 and the 2, fail down. 1 and the 2, 1 and the 2. What can you expect? Probably that 1 and the 2. Maybe something like this. Right? And there's an expectation that you can fully have on gold for the upcoming week. Now, what did I personally trade? I traded right inside of this this lower time from stage 1 right here. I believe I took a 4-minute trade here, or a 3-minute trade, 4 or 3-minute, and then I took an hourly trade. So let's go take a look if we can find that. Oh yeah, just before it actually. So we started making this pop higher, and I started trading inside of here as it started to find itself on the rising MAs. So let's go take a look. Yep. Now it looks like I had my stop much larger at the time. I think it was a 4-minute or 5-minute. So I think on the 5-minute is where the analysis started. I'll show you guys what I mean. Let's go back here. So on the 5-minute, kind of in line what I'm talking about, right? You had the start of this move. It started a longer term stage 1. So I'm going to try and clear this up for everyone here. There we go. Okay, cool. Those are those lower time frame entries. Let's get rid of those. Okay, cool. So again, price started this stage 1 and stage 2 on this time frame here as well, as the higher time frame was already very, very clear. And again, you had this longer term stage 2 that then started a long term stage 1, right, where price started to dip back down and then started new potential moves. And within that, again, you started getting the same thing you guys saw on Apple, the same thing you guys saw on NQ. You started getting your stage 1 into a 2, your stage 1 into a 2, or otherwise known as fractal MBs moving higher. Double MBs, whatever you want to call them, and started moving higher. And my eye instantly went to, hey, weak candle, potentially weak candle. These are now buy stop opportunities, because we know CSs, or let's say the buy stop of a candle, in itself may be a lower time from ICI. And I really wanted to get position on this. I didn't know if it was going to stop again. It could have stopped here and went. It could have stopped here and then went. It could have even went up and then stopped here and went. I'm sure with your own testing, you guys have seen this happen over and over again, where price starts and then might stop here and go, or it might go higher and like stop up here. Have you guys seen this happen within your ICI testing? I'm sure a lot of you that have been testing have likely seen this occurrence over and over and over again, where prices after a flush out will start to move, and then oftentimes they won't even stop. They'll just stop up here and then just take off. Maybe even stop for like a second. So I'm aware of this. So all I'm looking at is, okay, I haven't taken a trade this week. I have something that's very bullish, that's moving perfectly in regards to what I want to see. The context is there. I want to look for a way to get involved on this. We're in a longer term stage 1. The expectancy, or longer term stage 1, the expectancy is that these stage 1s and 2s should start to move higher, and I should be able to get some kind of position on it before it makes a longer term stage 1 to then start a new move higher, and hopefully I'm protected by the time it does that. So let me look for an entry on this. Now at the time there was just this high, which was basically just buy stopping a high of a candle. So I had started looking at a few other time frames. On a 4-minute, the second I went down, I saw this. And to me, this was perfect. This is the first time price basically went sideways for a little bit of time, right through that high. So the first thing I wanted to do is I said, okay, I'm gonna buy stop this thing. And I did. I buy stopped it and I threw my stop on using the higher time frame. So here you can see it was 1.8 ATR at the time. And just to show you guys this, 1.8 times 2, I usually want it to be under this number here. Usually. That's just my rule. And you can see at the time, actually I'll do it like this. Let's go back here. Let's go in here. Here's this from latest close long. There we go. Okay. You can see where the green box is. So I know my stop generally should be somewhere inside of like here. Okay, so I just threw my stop down inside of where it's just kind of under this 20 and 10. That's it. Again, there's no perfect way to do this. Sometimes you'll go bigger, sometimes you'll go smaller, sometimes you'll go very small. Some of you might even trade like this. But I just did this. I said, okay, I like the 4-minute ICI. I'll give it a little bit of space based on the 5-minute entry through the buy stop, and I'll give it a chance to move. And you can see I didn't want to protect it just at like here. I just protected the overall candle, the initial push. That's it. That's all that happened. And then I waited for a reason to break even. And I wanted to break even if price broke above this high. I think that's what I sent out initially. Pretty sure. Let me take a look. So as price started its move on the 4-minute, here we go. Right, it started its mini move. There's that 4-minute buy stop through the high. All I was looking for was, right, some kind of pause and a break beyond that goes higher. Then prices started to kind of go down, as you can see. Prices started to come down, as you can see. And all I was expecting is that prices should come up and break through this thing higher. And if it does, or if it starts showing some kind of strength, it shouldn't ever come back here because this is now a new ICI or buildup of a stage 1 that should start taking off. And what's even more better is during this time, as this is occurring, I'm literally crackhead energy going, hey guys, if I'm a lower time frame trader, I would be watching this thing right now on a 5-second and 15-second. Hey guys, here are your 15-second entries. If I'm a lower time frame trader, I'm taking these. Hey guys, if I'm a lower time frame trader, I'm taking this. I'm literally getting ready to take this thing higher. Hey guys, if I'm a lower time frame trader, there's that buy stop. There's another one. I'm now moving to break even. Hey guys, if I'm a lower time frame trader, just like I showed you guys on Apple and on NASDAQ now, did price ever come back to the buy stop of a high? Did price ever come back to the buy stop? And did trend deliver? So what conclusion can we draw as scientists? Trends that are going to deliver are going to do so with strength. So managing quicker is something that you should look for and consider in your trading because those that work. Did this one, ever since it got validated right here, ever come back to break even? Did this trade ever come back to break even? Did this buy stop, if you took it, ever come back to break even? Did this buy stop, if you took it, once it started going, ever come back to break even? If you took this buy stop, once it took off, ever come back to break even? So all of a sudden, you should be, as you're watching this, even if it's your first time ever being in this mentorship, as you're watching this, signal should be going off in your head. Hey, I need to look for things that are going to give me quicker management because the ones that work are going to work. And I started sending this shit out on repeat here. At this point, all I'm telling you guys is this is where lower time frame traders want to get entered. Why? Is it because of some wizardry or crazy stuff? Or is it because a higher time frame is now going through a stage 1 on the rising MAs within a bullish market? The same rules. Prices are now in a longer term stage 1, right? Inside of this whole stage 1, and from there had a stage 1 and a 2, a 1 and the 2, and is now going through a 1. The expectancy is that this 1 off a lower time frame should create opportunity to start a stage 2 that should, by the point that it delivers, either keep you in the trade long term, or take you out if it's not ready. That's it. It's the same repetition no matter what time frame you look at. It's the same kind of move. So at this time, I'm literally, kind of crackheading at you guys and saying, guys, if you're a 5-second, 15-second trader, this is where I would be watching. This is where I would be trading. This is where I would be trading. This is where I would be managing and trading. This is where Many traders that trade a lower time frame just had their entire months made. Some had their entire years made. A trade like this can be worth, based on who you are and your account size, 10K, 20K, 100K. This is what scalability will look like for you as a trader. And then price delivers. And it delivers, and it delivers, and other trades deliver, and then it takes me out. But then again, right, based on the kind of trader you are, if we go back to that 15-second, okay, here are those available trades there. However you want to swing it. Here's that trade, ICI. Then you get another one, ICI. Okay, no matter how you swing it, no matter how you entered these, let's even say you entered the last one, protected the low, looked to take it higher, okay? No matter how you played this, once you're right until it comes back. And then you can go ahead and study the delivery. Let's find this. Then you can go back and study the delivery and what was actually made available in terms of RR for you, right? What was made available in terms of RR for you? I don't know. Let's go check. Let's delete this. Let's draw this out. So prices came back to break even. No, they didn't. Okay, they didn't for a while. And then they did here. So prices, based on how you manage this, right, made a move, 23.78, made a move of over 77 RR from that original position. Now again, this is by no means me saying that you as a lower time frame trader would catch the 77 RR, but your rules might have permitted that. The likelihood is that you either got stopped out of some of your position up here at around 14 RR, and then you either held through a higher time frame management or just got out maybe at an MB like this. And that's fine. There's nothing wrong with that. You just need to be aware of what those rules are, right? So that's where I got involved and then took this thing higher, just on the 4 minute. So again, I'm not gonna sit here and bullshit you and be like, oh, I took this small trade and I made all that money, because I didn't, right? I traded a 4 minute trade and I showed where the opportunities were then made available for those of you guys that traded even lower. And even better, right? If I waited, is this a good bullish trade right here? If I waited a bit for that setup, right through that high. Yeah, it's perfect. Now again, in this case, a higher entry means a higher likelihood of getting stopped. And that's fine. That will happen too. It will happen. You'll get stopped. And then new trades will be made available. This is how markets move. Right, so that's how I kind of analyzed gold and walked into gold this upcoming week. And then there was a news day, right? I think on this day here, and I got stopped out. And that's gonna happen. There's nothing that, there's nothing stopping this from happening. That's okay. Prices can and do and will move like that. It's fine. And again, if I'm not trading an hourly, which was this high, is this a potential trade on a 4 minute here or here? It is. And again, a lot of these might have been stopped, break even, or if you waited on this one, which you probably would have, this one would have made its move. And that's okay. That's how rules function. You can't always be in everything and you can't predict it right at all times, but the best thing you can do is just manage risk when you are right or when you get involved, and you make money that way. Okay, so that was gold, right? And gold is beautiful. That was everything that was kind of available on it. And again, you go back and you study how you would have traded it on a lower time frame if that's something you trade. Because, like even then, it was kind of choppy delivery, and that can happen. But yeah. Adam says, would you trade a 1 minute here when the daily touched a 10, or is the daily too extended? Here? Yeah, of course. Why not? Stage 1 and the 2. Stage 1 and the 2. Stage 1 into a potential 2. I wouldn't trade a 1 minute here. I would 100% trade a 1 minute there. And the shortcut to find such pairs and stocks is the screener. Yep. What is your opinion on adding to your winners? Sure, go ahead. Do you know when the new update of the indicator regarding the directional trigger candle is coming out for the MA options? Yes, soon. Probably tonight or tomorrow. I think the hardest part is to literally stay out and not force yourself into a trade. Yep. Most of trading is staying out. That's it. Guys, I've said it so many times, but most of trading is staying out. Most of the trading that I ever do on euro dollar is going to be staying out of it. Most of the trading that I ever do on Tesla, okay, here's Tesla. Most of the trading that I ever do on this pair, just so you guys know, is going to be staying out of it, right? The trading on this thing happened back in the bullish context. Now, it's been a stay out of market for over 3 years. Most of the trading that I would have done or have done on GameStop, okay, would have been in the bullish market. Most of the other time spent on it, maybe before this, was in dead action. About 2,000 days was at 369, 6 years, about 7 years of nothing. And then following that, another 4 years so far of nothing, 3 years of nothing. Now, you know, it finally had some clear institutional buildup of some sort, right? So now lower time frames might begin to create action that's tradable, but most of the action and time spent on any given pair is zero. There's close to no work to be done. Most of the trading you do is sitting on the sidelines. That's it. Most of the traders that traded anything here, any given day, wherever they entered, no matter where you draw a line, no matter where they entered, almost every line got taken out in some form or another without ever delivering a market condition until here. So unless you were the lucky guy, the super little lucky guy that predicted this, or maybe this entry here, right? So the more I draw, here we go. Great. So unless you were that one lucky trader that predicted this line, because I drew these randomly, this line, or this line, you are losing money on this, right? And like I said, if I can create the rules of the game, I'm not going to look for trades like these because it means I have to take trades like these. That's it. Right? Very, very simple. I just look for the opportunities that make the most sense to get behind, where everything is on my side. But most of the time you spend on any given pair is spent doing nothing on it. You want to know how long I spent doing nothing on gold? Since here, well, actually it's hard because I traded some of the stuff in here at some point. But basically, most of the stuff that came from gold happened inside of this action here. So truly, the last 3, 6, 9, 12, 4 years of action on gold were for the most part untradeable for me. That's 4 years that I didn't touch a pair, right? For the most part. Not exact, but 4 years. Silver. I didn't touch this pair for this entire time until it showed this right here. 3, 6, 9, 12. 3, 6, 9, 12, 15. About 4.5 years I didn't touch silver until here. Now, still, despite this, it looks like, I bet for a lot of you, from your perspective, that every week I have thousands of things I'm looking at. There's just markets always. How does he do that when he doesn't look at something for 4 years? Well, I look at a number of markets, and I look at the ones that are clear right now for me to trade. And there's always going to be a clear market. The question is, are you willing to look for it? Are you going to seek it out? Or are you just going to keep on trying to trade a market like this? And again, draw as many random lines as you want. Here it goes. On any point in price. No matter which one of these you took as a buy or sell, it ends up in a very specific way. No matter what you take here as a buy or sell, you get lucky maybe one or twice here. Then you start losing again. Still losing. Still losing, no matter where I draw a line. Finally, on this trade, you get lucky. Everything before this trade, you would have taken losses and chop, and you wouldn't have a direction. I want you guys to truly look at this right now, at just the lines right here in front of you, and ask yourself, not even ask yourself, prove to me, disprove me, okay? Which one of these entries here would have kept you in a workable trend? Which one? What line, except for the last one, would have kept you in some kind of trend that would have made you some money? Nothing. So what's the point of FOMOing into a potential move instead of waiting for a move that has proven itself? There isn't a point. So all of a sudden, all of your brain should go to, I don't need a trade, I need a good market. I don't want to trade, I want a good market. I don't fucking care about the trade right now, I want to find a clear context. Because the context created the good move. Now, Adam says it depends on the stop loss. Now, that's a terrible way to think about it, and here's why. Because even, Adam, if you caught this long with your stop at this low, the most you have made in the last year, right? Year? Yep. The most you've made in the last year is 1% on your money. Congratulations. Your randomness made you money. Was it worth it? Right? Of course not. It's terrible. And even worse, Adam, if these are all your entries, one of these is guaranteed to be a sell, which means no matter where I put it, let's find a random one. Here's a sell. Stop loss over the high. Look for at least 1-to-1. Okay, so what has been the true outcome of your large stop loss that delivered 600 pips met, guys? Good signal group, 600 pips, we made it. How much is the true outcome of your trades? With this stop loss held you in the position. After a year of price. 0 RR. You made 1 RR here. You lost 1 RR on this trade. What a beautiful performance. What a performance, right? And you start to realize that profit is not made by being the first one in the trade and predicting the new low. Guys, this is like the best this is the best example here. Be honest now. After what you've learned, would you rather be the trader that went long right in that candle? Or would you be the trader that went long right on this buy stop of this candle? 1 or 2? Both made crazy RRs. This one made more RR. But this one kept you in the move from when you initially got in. That move then allowed you to properly manage into it. And you had an extra half a year to get positioned into anything else. Now, do you think over half a year, there was at least one other market that produced a trade like this one? Okay, so all of a sudden, you should have an entire mindset shift on what it truly means to catch the trend or catch the move. It should never have been about finding this move. It should be about getting involved when the market has proven itself, because that's where you make the most money. Again, same question. Would you rather get involved here or, as we just looked at, the buy stop through this high or this high off the CS? Again, this is significantly better than the trader that does this. It just is, right? No matter how you swing it. Again, I would rather be the trader that trades here than the trader that trades here. This guy made more money, but he had the likelihood of being caught in a longer chop before this ever became true and before this move actually came. The thing about big moves is that they will give opportunities to those that wait for them. By the time a big move wants to go, it will provide opportunity. That's exactly what gold did. That's exactly what silver did. That's exactly what NASDAQ did. That's exactly what UJ did, and then UJ did back here. That's exactly what Bitcoin did. The people that made money on Bitcoin didn't make it from buying here or here. They made it from buying as the trend proved itself. The trend proved itself. The trend might prove itself. Right? That's the easiest way to get to a point where you secure yourself to make money. That's it. Right? And now I'm in it. Looking to take it higher if we can. We'll see what happens on Monday or Tuesday or whatever over the next few months. Beauty. Absolute beauty. John said, can you talk about what you'd want to see on Euro US dollar to identify the start of a trend? Yep, the screener to be in one color, generally. Again, I can make up, again, John, I think I've done this a few times. I can make up random things for Euro dollar to do, but I have no reason to do that until it's made something. What would it have to do? Move in the distribution. Move everything in a distribution, then maybe here, it'll be an overall distribution to follow it short. Or become accumulation, break down, become accumulation, start moving, maybe find itself here, and now everything's in accumulation, so now I can follow it. Everything else until then, for the next probably few years or a few months, is going to be a not-touch environment. Again, I can't predict what it's going to do. All I can wait for is a clean environment. None of that has been given to me yet, so I'm going to walk away from it. Ever since I've been taking Mentafect chart ideas, entries, and then putting them on my own charts, everything is so clear now. Well, there you go, man. In official Monopoly rules, they even say don't use house rules and use the official ones. Yep. Hey, Anton, what are your thoughts on shuffling around timeframes for entry to look for the cleanest setup? Yeah, I did that. But I wouldn't do that if you can't be profitable on one time frame. Same problem, right? If you can't identify potential setups on one time frame, the second you start adding in more, it only creates more entries. And more entries when you can't make money on one entry or one time frame mean you're going to lose money on multiple, right? If your EVC lines up but daily isn't lined up, do you still wait for everything to line up? Depends on the market, depends on what's going on. Like, if you're trading a 5-minute chart of a stock maybe, and you know it's really clean, like it's ready to go bullish or it's proven to go bullish and now it's setting up a move, right? Or it's setting up a move, whatever. But the daily at the same time was like in a very bearish move and just made a bullish, right? I'm still going to follow this because the 5 minutes too far disconnected from caring about the daily, and the likelihood is that maybe the 30-minute, the 5-hour, 4-hour, whatever, are probably very clean for a move. So I don't really care how far disconnected this is, because again, the move is, you know, you're disconnected more. But also, if you're consistently not making money, then maybe you need to interpret the daily as well, because maybe for you, you need to be more patient with waiting for trends. Because at the moment, you're forcing more things than you should, right? So it's just down to the trader. Jamie says, is finding your own edge in trading similar to a casino having an edge in roulette with paying 36-1 when there's 37 numbers on the board? Kinda. I don't know. It's a weird comparison to make. That's technically an edge, but like finding your own edge is not similar. I don't know. The question doesn't make much sense. Yes, as a trader, you want to find an edge. If your comparison is that a casino has an edge over the player, then yes, you want to have an edge over the game, right? That's it. Could you do an outlook on RVMD and Trox? Sure, I'll do a quick look at it. Sorry, guys, I'm so sick. Like, I need to get off in a little bit, but yeah, let's see what we got here. Yeah, it's a little weird. I'll probably give it some time. Made a move. What's the entry time from doing? Yeah, I mean, it could go.
Sure. It depends how what your rules are telling you to do here, but I don't know. It looks weak to me. Why is NASDAQ at all-time new highs and this thing can barely go? And it's making this, had this huge range, kind of made its move higher. You know, if anything, like when was this? 12th of March? What was happening on the 12th of March? Right, so on the 12th of March, this thing was like stalling, while RVMD was also kind of stalled. It was actually in a bearish I don't know, it's weird. I don't like it. I would ignore it. I wouldn't even look at it, to be honest. Trucks, on the other hand, looks a little bit better. Ran up with the market, just had earnings. You can see red news, basically, and took off on the red news. So you couldn't have traded inside of here. Longer term stage 1, 1 in the 2, 1 in the 2. Yeah, it could be setting up a stage 1 into a stage 2 on the daily here, for sure. Right? That could happen. But once again, like, this thing seems to just be moving with the market, right? So in that case, you might want to just... Actually... I mean, yeah, it started popping with the market, went to all-time new highs. And then this thing kind of slowed down a bit, but that's okay. It could just be absorbing this initial move. So I would ignore RVMD. Trucks is a maybe. And right now, it's doing what? Made a move in a longer-term stage 1, failed down. Yeah, I mean, if this can start making a move higher and makes like an ICI here, that could be a setup. Otherwise, I don't see it. Hey, Anton, quick question. Did WMB ranges have to come from a bearish or bullish structure? Because, for example, you took a zone from a bearish daily WMB range, even though we came from a bullish. You said those double are not valid. My guess was that you only pay attention to when you want to look for confirmation, because the perhaps best sense to flush out is... Yeah, so I was about to say, I don't trade using that specific thing anymore. And if you have an image, that would be a lot easier to look at. But a double MB often comes from an opposite side MB, of course. But you can make both work for you. I think I've had multiple videos and webinars where I've spoken about how double MB can be viewed at the most recent double MB or the starting double MB. So, yep. Odd USD looks much better for longs than Euro USD. Well, let's ask the screener. Yep. It definitely looks like it's going to show a lot more longs, so we can actually take a look at it. But like Euro US dollar, I assume it's going to be very unclear, right? Well, actually, this is more clear for sure, right? You have a bullish push, which is nice to see. So yeah, honestly, this can start a mini stage 1. This actually has the likelihood of moving higher. This looks a lot better than EU and has a lot of things lining up with it. If I look at a weekly, it's way in the dumps. So that might be something that turns you off from it. You know, moving downwards, moving 200. But it can make a mini move. So depending on what the lower time frames are telling you, based on what you're kind of trading, this could do something. Like this trade was not terrible right here. Probably still not a break even, so you want to see this make a move. But yeah, AU is okay for longs if you were following this on a lower for sure. You know, you can make one at the start of the week here as well. So yeah, it's much better than EU for sure. But it reminds me a lot of oil, and because of that, I wouldn't want to look at it, right? Like it's failing to go any higher. It's failing to go higher on the institutional pushes. I would probably wait for this to push higher than this. And then here, okay, I would start to look for bullish context, like a longer term stage 1, and then look to follow that up. That's where I'd want to look to get involved. Unless you're a very low time frame trader, I'd be ignoring all this, to be honest. Like look at oil. Compare this, for instance, right? Same thing, right? Prices came higher, we started following it, and then look what happened. It made this push that didn't even come beyond this, and guess what? It started failing, and it's likely to keep failing. Now compare that to something like, let's go UJ, right? So here's UJ. Compare that to something like this, where if you waited for it to make the push out of whatever highs it's been between and make a push higher, so everything's proven that it wants to go higher, and then it starts going sideways and you start following it, and makes its move. If you look at US 100 or QQQ, whatever you want to call it, right? As it proves to move higher beyond some highs, proves to move higher beyond highs, that's where it moves higher. Then as it fails back down and it's already made a move higher, it then keeps moving higher. And as it comes back down and then it proves that it's moving higher, it then moves higher. Look at gold, right? We didn't follow this thing until it started truly making breaks higher. And then upon this, making this break higher, we started expecting it to move higher, and then it moves higher. Then compare all of that to this. You have a move that hasn't proven to move higher. You have a move that hasn't yet proven to move higher. So either let this move higher and then make setups, or let this move higher beyond here, reaccumulate, and then maybe make a lower time from nice context here to follow this. Right now, I don't like it. Copper went even crazier than gold. Yeah, we spoke about copper, didn't we? Wow. Yeah. Yep. Right? I mean, compare them. It starts to move higher. You don't know if it's legit yet. Comes down, starts accumulating, makes a beautiful move higher over all this nonsense. Right? Stage 1 and the 2. 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 Now you're waiting for probably stage 1 and the 2. If it even wants to do that. Right? Yep, and then delivers higher. Delivers higher beautifully. Yeah. I meant the 1 minute in the red circle. It depends on the lower time frames here. 1 minute, so you're probably looking at a 1 hour, maybe a 2 hour as your context, right? Or like validation could be a 6 minute, maybe a 15 minute, kind of just around these areas, kind of double it, whatever, just play around. Yeah, there's probably 1 minute entries inside of here, of course. Of course. Right? It's starting to click for me now. 6 months here in mentorship. Hardest easy thing for me to get. Yeah, there you go. Yeah, you do not want to lock your money up. You do not. For your allergy, don't know. All right. For the allergy helpers, shoot me a private DM or off topic and tag me, okay, guys? If everyone here follows rules taught with proper risk management, we will all be multimillionaires within 10 years. It's just following simple rules. Remember this, folks. It's all about the end result. Enjoy the journey. Yep. Exactly. Now, again, that's not me guaranteeing that you'll all be multimillionaires, but it really does come down to following a few simple rules and letting those simple rules make you money. That's really it, right? That's all we're doing on repeat. On repeat. Yep. That's how you do it. Yeah, this is Sarath's. Yeah, this is really, really good. That's like almost insane to look at. But if this is what your actual testing has shown you, then this is just phenomenal, dude. Like, get yourself on a funded account or get yourself on a personal account, even smaller, if you want. No guarantee, right? Do whatever you want to do with your money, and start putting yourself, start getting used to how this actually delivers in real time, because it's going to take time to let this from a forward test perspective come out. Same thing for you, Gemly. What pairs are on your list for this week? Gold, silver, crypto, NAS. The same ones as last week for the most part. It's all the same thing. It's always the same thing. Yeah, it sucks that I missed this. I would have loved to catch this higher. There were some great trades up through this all. What about USD CHF? Looks like it has some generally bullish context to it. So let's take a look. The hourly already looks pretty shit, but that's okay. Yeah, I mean, you have some money coming in. It's stage 1 right now for a little bit, right? Yeah, I mean, if you can jump up over all of this nonsense, right? If you can come out of this to start a stage 2, so you have kind of like the stage 1, start a stage 2 here, and then go sideways. Yep, this is fine for a move. Nothing against it at all. So basically, if it can move higher than if it can move higher and break above kind of this high here, this 91,000, 9100, it should make a move up to like 92 for sure, minimum, I think. Let's take a look at a lower time frame. So then you have quite a bit of wickiness here, but that's okay because it's starting a new leg of its own here. It's in reaccumulation, which is really nice to see. Yeah, if it can move higher here, you're going to be in a generally nice context for sure. Lower time frames, I'd probably not touch. Actually, no, lower time frames are fine too. Yeah, let it get above there, let it reaccumulate, and you can start getting trades higher. Comp-man repost. Are there certain hours you trade? Yeah, generally 8 a.m., 7 a.m., 9:30 a.m. until around 2 p.m., 3 p.m. I know you've used your data collection to kind of know what hours to stay out. My testing has just shown to stay 1 hour before red news and rollover, but curious if you trade all other hours. No, just basically US hours. King, I'm going to get going on my day. Good thought. Good stuff, man. I'll see you. This is how many days I've traded this week. Just 3, and I'm up 11.3 R. Yep. That's how it goes, man. This is beautiful. Good job. Thoughts on odd JPY? Probably the same as UJ. Yeah, it's probably bullish just like UJ, I'm assuming. But it's just like straight up. It's hard to trade this kind of thing. I don't usually know how to trade these kind of things personally from when I've seen them. Lower time frame, yeah, this is definitely stronger than UJ right now, so that's really good. Went through a very nice longer term fractal like stage 1 into stage 1, 2, 1, 2, 1, 2. Yep, so now you're looking at either lower time frame entries off the stage 1 and 2 or longer term stage 1 into new delivery higher like this. So honestly, I'd say odd JPY is much cleaner than UJ. It is actually, yeah. So I'd watch odd JPY over UJ now. It's pretty good. Yep. And then this week you had some setup in here probably on lower, but I was not looking at it. US 100, is there still opportunity for longs? Not right now. If you're not in this thing, you needed to be in this thing at any point in here. Literally any point. Now I need a little bit more sideways probably. Well, actually, I mean, it's starting at sideways, so this is a mini stage 1, so it could start a move through the highs, yeah. Yeah, actually, if lower time frame starts setting up, no reason we can't have this move higher. Someone said, what about US oil? Well, what did I just say about US oil? I literally was on it a second ago and compared it to something as well. Stop coming in late. Start showing up, man. It's trash. I wouldn't follow it. It's down below the 200 or just at it. It's not proven bullishness yet. It's in reaccumulation, but it's not over the MAs. This thing needs to at least push up. And it hasn't done so yet. This thing needs time. Yeah. Euro US dollar. I'm going to ignore that question completely for now, because that just sounds like a troll at this point. ZS. Let's take a look at that. ZS1, you say. ZS1. Soybeans. Yeah, I mean, I was bearish on this. It came up, so it's hard to be bearish on it now. It's above the rising MAs. So there's not much to follow on this thing right now. Wait for it to become distribution. Same thing as back here, where it became accumulation and didn't distribute. I would not touch this right now. It was nice bearish. I started getting position bearish, and then it became bullish. So now you have a clash, right? And Tate, regarding the euro dollar, you can check out any of the recent 10 webinars. You can check out this webinar because it was just discussed, but the thoughts on it remain the same. $15-minute. Yeah, this is great, man. Looked at Bitcoin already. I actually sent out a message on it this week. I'm in this thing right now. I'm in a long on Bitcoin. Bitcoin has been showing general bullishness across higher at least. Then you had the start again of a longer time frame, higher time frame, stage 1. You can see it says distribution here, but it is, in my opinion, reaccumulation because you have strong bullish into a few bearish breaks, into a re-break above those MAs. And the start of this stage 1 in the 2, stage 1 in the 2, expectancy stage 1 in the 2. So it should start delivering, which is really good. Then I sent out this right here. Nope, not that, sorry. Go even higher for you. So I sent out this right here. I said, tomorrow, if I can get it to pull back a bit, I'll take a buy stop on this thing for sure. It looks very good. You can see I had the photo, reaccumulation, everything looking good. Popping above in accumulation over all the MAs, looking for that continuation. So I took that exact long, pulled back, took the long through the high, entered with my stop down here. Not at break even yet, and then the week ended. So I'm in this thing, but you know, I'm waiting for it to do something because there's nothing on it yet. Hopefully we start a bullish move this week and then I get to move to break even. Jamie says, from last webinar, you talked about German 30. It worked exactly as we said. Yep. Makes sense. That's DAX, right? DAX. Yep. I mean, it's a beauty. It is a beauty. An absolute beauty. You had a little bit of sideline, started going, pulling back, starting a longer term stage 1 right now, which is perfect. Give it some time to catch one of the MAs and start lower time frame moves, or give it a little bit of time to fall down and start a new move higher. This looks really good for longs right now. Yep. No reason this can't continue delivering, no. Looks solid. Building some kind of longer term MB right now. Yeah, it needs a little bit of time, but it looks clean. No reason this can't move, right? There it is. Started to find itself on the MA. Give it a little bit of time. Honestly, it's probably ready. Start looking on lower to trade this higher, and you're pretty much in a good spot here. It's solid. It's very solid. Let's take a look at the 65-minute. Yeah, this looks really good. You have a prior move. It's already there. It's proving bullishness. Comes down. Probably will build like a little, whatever, little base here. Let it come out. It'll do the same thing as gold here, as last week. Watch it go sideways a bit. Watch it come out. Watch it bounce. You get your entry. Then probably another entry. A little bit of sidelines, maybe even a flush out, and off we go. Exact same thing as gold. Literally. Yeah, this looks really good for a long. I'd look for it. Tate says, fetch AI. I'm guessing it's this. Starts a bullish move, reaccumulation. Starts a bullish move, potential reaccumulation. Kind of moving inside of this area here. Coming down right now while Bitcoin's going higher. That's very, very weak. Right? For the most part, but that's okay. Lower time frame is in a long-term stage 1 with nothing clear. And this is in a weird distribution. So nothing yet, but yeah, if it shapes up and comes up to like 2.5, you can maybe consider it. SPA 35. What's that? Spain? The Spain index? Longer term stage 1. This is where the entry should have been. Anywhere in here, anywhere in here. Yep. Can definitely start another move higher, but these should be where the entries were. Jump down a little bit lower. Yeah, you had those beautiful entries. Like, this is exactly what gold did, right? Same thing. Sideways, broke out, MB, MB. This is your delivery. Now you're getting some more sideways. I would probably anticipate this to, you know, I'd want to see it like maybe fail down, sideways, same thing. Maybe you can get another entry like through there. But now it needs time. You should have been in this in any one of these trades here. Those were all the trades you should have been in. You're showing up to the market a little bit late now. Right, show up when it's within the stage ones and then moving. Now you have to wait maybe a little bit. It could start to move, but you're likely looking at a few more sideways, which makes sense based on that lower time frame, and then expansion again. But maybe. It can definitely go. It'd be better to be here and then position because, you know, this can explode now or just fail back. I don't like getting involved like as something already has proven itself, right? Like it's the equivalent of get in here, don't ask to get in here. This is where price is right now in relation to prior action. Like, yes, it might make the move, but you're very late to the party, right? This and this is like this, maybe this here, like that. Those were the entries. UNG. Terrible. Yeah. Unless you're trading very low time frame, but even if you are, it looks very illiquid for a lower time frame, so much harder to likely trade it. I mean, it's all right. It starts to move. You know, stage ones, and now it's way too delivered. But yes, if you traded it, these are the moments to trade it. Maybe here at the latest. This is very late. We should not ever be looking. Oh God, we should never be looking up here. Just absolutely no reason. And then if you are that lower time from trader, then yep. You had some maybe opportunities inside of these moments. Here. This just went up, and then this is too late, likely. GD stock. I mean, so definitely an accumulation, but what do we got? Stage 1 and the 2. Stage 1 and the 2. Yeah, I mean, it's the start of stage 2. The entries were in here. Right? The entries were literally here and here. If now you're looking at it, you're way too late. Hood. It looks weaker than the overall market a little bit. But kind of stage 1 into a fail 2, then longer term stage 1. You know, this isn't stage 1. Came out of it. Stage 2 right here, which is good to see. Potential entry in here. Now you might have to wait for a little bit of side before you can go again. Let's see if you actually got any like clean entries on this. I mean, it's a hard one. Starts to move, comes down a bit. Yeah, it's a little weird. There's honestly like yeah, you could maybe consider the buy stop here, but I hate that, you know, the Qs are just breaking out and just non-stop moving higher and breaking higher, and then Hood doesn't break higher until very recently and then does so quite shitty. I'd probably ignore this pair overall. It doesn't look like something that wants to maybe make a big move. I mean, honestly, well, okay, structurally this was really clean. It definitely has power behind it. It didn't come down as far. Okay, hold on. It didn't come down as far as the Nasdaq did, right? So it didn't get sold off heavily. It actually kept getting accumulated a little bit. But then this was just so weird. It was on Red News, so that screwed up a lot of its ranges. And it started a mini stage 1, stage 2. Yeah, honestly, it's not terrible if this is something that's on your list. If you can see a little bit of stage 1 on this thing, so a little bit of pause, maybe 1 or 2 days, we should see a nice move higher for sure. I think hood's actually a fine thing to look at. Feeder cattle futures. Really good move before. Started a very long-term, like higher time from stage 1. Moved into accumulation, into reaccumulation. Moved down, yeah. Just kind of taking off over these highs here right now. Within a reaccumulation, so that's pretty good. This hasn't shifted to accumulation just yet, but it's definitely moving in accumulation, right? So you're starting to kind of pinpoint this move. Kind of something like this, probably. Yeah, I'd give this, this is likely to move into accumulation very soon, so that's good. Yeah, if it starts to make a new stage 1, then this has a likelihood for a move. Looks very ugly. Whoever just recommended this. Same thing as one of the other pairs we looked at. Let it get above here. Same thing as gold last week. Whoops. Here we go. Where is it? Where's my thing? There it is. Right, I mean, this is kind of shit. It's going to bounce over, and then here, you might get a trade on it longer term, and then boom. It needs time, though. I would not trade it right now. I'd give it a second to pop out of here, and then find MA support right here, and then go. Coffee. Yeah, broke down. Same thing as those other time frames, right? It just kind of popped. You can see if I draw this in. There we go. You can see it just had its first like decent expansion. So yeah, this is actually setting up to on this time frame be good long. But you need probably a little bit of time now for it to either just go sideways now, or even better if it starts off the week sideways for a bit, for 1 or 2 candles, and then you can follow that through. And that'll probably be the same story of a lower time frame. So like if I look at a 65-minute or an hourly, yep. So you have this accumulation into very deep distribution, and now it's just at this high to potentially become longer term accumulation. So you can wait for this to set up a little bit better there. Yep. Like take a look what creates a move, right? So like look at this, remember it for a second, and then kind of take a look at this, right? You had this big down move, price kind of plays around, and then until it comes out of this, it doesn't really make clear moves. And you can try to predict these points maybe after some bullishness, but right now I think we're in this stage right here on coffee. I think you're gonna get, you need a little bit of time on this now. Yeah, you need a little bit of time, but it's getting there. It's getting there for sure. Lower time frame. Let's see. You know, you just moved into lower time frame clear accumulation. So like if you're lower time frame trader, if you can get a longer term like mini stage 1 out of this, so basically price wise, you're looking for price to kind of slow down, maybe chop around, come down, and then boom. This should be very nice for lower time frame traders, in my opinion. You should be able to get some nice positions on this to start a move, and then maybe you can hold that into some crazy runners, but you need a little bit of time. I think the only start you might have seen to some bullish action if you were trading, actually I would not trade this bullish yet at all until this happens, to be honest. Even though these delivered, you know, these delivered, but I would not be trying to get position in that. Copper, I think I already looked at copper. You can go back and check that out after, but yeah, you're way too late to the party. You should have been trading this thing like at any point after this stage 1, anywhere inside of here, anywhere inside of here, here, here. This is already too late. This is now your like beyond pushed market. It's likely going to go into longer term distribution now. This is very extended right now. You're showing up very late to the party, in my opinion. This kind of looks like UJ before a huge correction. if you think about it that way, right? You had your moves up. Now it's either explosion time or even better, like this, right? Like look at UJ. It's probably going to do something like this. I think it's right here. Copper. Right here. That's where I think copper is. Stage one, 2, 1, maybe 2. But yeah, I mean, it's bullish right now. If you're in a trade on this, then great. This could explode and you make a bunch of money, but I probably would not try to position myself now. The positions on this thing were in here, latest in here. Now you're a little bit late to the party. Now you have to kind of let this thing deliver. And then maybe if you're a lower time frame trader, inside of this leg, right? If you're like super low time frame trader, when this moved into accumulation, off this break right here, because that likely was accumulation, these are your lower time frame entries. These are your lower time frame entries. This is like late on every level, right? You need to give it time now. Can you look at HAG? Yeah, I mean, it looks like it wants to get ready to go. It's not bad. Coming out of, you know, it's in a stage 1, coming out of this like stage 1 and the 2, stage 1 and the potential 2, kind of riding these MAs a little bit. A little bit choppy down here, but that's okay. That can happen with the stock. Yeah, let it stuck in this longer range too. That's a little bit shitty. So I'd probably let it come up a little bit, maybe up over these, and then start looking for trades up here. Deck looks weak, super weak. I would not follow this. And earnings are coming out in like 4 days, 3 days. So that's red news. So there's not much to do on this thing. It's in a longer term stage 1 right now. It came out of stage 1 too. Gave you opportunity here. This is almost like where that German stock is, right? So the German stock is like here right now. The German stock might come out and then give you a setup. Now you're a bit late and it has red news coming out. So, you know, that's pretty shitty. Made that bullish break, came down a bit. Yeah, like the trades were either as this gapped up or in here. Now you're in a long-term like sideways. This is gonna either fail down now, right? And then maybe reset up a move, which would make sense because then it would have enough time to go. Otherwise, there's really nothing to do. This was on my list for last week. Oh yeah, if this was on your list last week, these were some opportunities in here to grab. Like on a lower time frame, maybe you had some. Oh, okay, yeah, you did have some nice stuff in here. Yeah, like this is a great CS right here, but it's a little hard because this thing card's sloping down. I like it when it's still sloping up. Yeah, I mean you had some nice trades. Now you're positioned and at break even on your move, wherever that move might have been. And looking for this to deliver or waiting for a little bit more sideways, right? Because like if you think about it, like okay, look at it. This is 10th of April and this was the 25th of April, and it came down heavily, right? And then the Qs or Nasdaq, right? 25th of April, right? So like by the time this thing started showing accumulation, DEC was still bearish. And now, as the Qs literally rip higher, so as Nasdaq is like fucking dying to go higher and barely, you know, pausing, ready to go higher, 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 DEC barely goes higher, isn't anywhere near, you know, a new MB high, gap down during the market being weak, didn't rally with the market as the market rallied higher, right? So like everything about this is saying, listen, if the overall market is even a little bit weak, I want to shit the bed. If the market is very strong, I might make a little move, right? So I'm really uninterested in stuff that is showing, you know, grave weakness. Versus, like, when was this? 5th of January? Like, we can look at this. Like, it was 5th of January, okay? Let's look at the 5th of January here. Right, so look, it's literally with the market. Like, this market wants to correct, that thing corrects, right? No matter what. New MB highs. Then it corrects a little bit on 17th. Right, so if anything, the only time it started showing a little bit of strength was maybe back here and maybe inside of here. So then if you started following it, you know, it was even hard to trade this too, though. Yeah, I don't know. This thing does not look like it's something that's going to give you, like, great edge. It just looks like the general market, in which case it's better to trade just the NASDAQ, right? Because what's the point of being in something that's moving just like NASDAQ? Like, I'm even a little bit sus of being in NVIDIA right now, because it's almost like as weak. It's actually weaker right now than the market. The only saving grace on NVIDIA was, like, it had some buying while everything was selling off, and then started buying up quite early, I think. 26th of April. Where's the 26th of April? Actually, it's like the same, but it popped over, right? NVIDIA. But it popped over and then held DMAs, whereas the NASDAQ, like, started dropping lower. So this thing was saying, at least on some level, hey, you know, I'm a little bit bullish. I could start a move faster than the overall, like, stocks, than the overall indice. So I took a long on this thing through the highs. Right, and I think it's going to repeat what it did here. I hope this thing just... copy this. Here we go. Yeah. I'm just hoping this thing now does this, but here. So I hope it just kind of pauses a little bit, breaks higher, and then here, I hope it lines up here for earnings. Because earnings is coming up. Because I'm already in this thing, right? A few weeks before earnings, or like a week before earnings. So at that point, I might hold it. But if it stays like this until earnings, I'm going to get out of it. Even if it, you know, unluckily does something like Carvana. If you guys remember this, you know. I closed it in here. I closed it here. And this was earnings. But again, I unless it's in enough profit, I'm not just going to hold it. So... hopefully this thing, start of the week, shapes up a little bit, comes up a bit, and then I'll hold it, and we'll see. In my testing, holding through earnings was profitable. Yeah, and that's fine. It usually could be, but you just need to be aware of, like, the best way to do it. Like, you know, where did we have, like, last time it was, like, good earnings? Yeah, like, here's literally what I expect. You know, like, I think I entered this thing basically here, right? And I'm hoping this week, because we're getting this down move, I'm just hoping this week we have a little bit of bullishness before earnings, and then we can earnings. If it wants to gap up, it can. Right? So hopefully we hold my stop loss or whatever. Yeah, hopefully we hold my stop and don't take me out and start going bullish. Because I need this thing to show some kind of bullishness. Like, right now it's below the MAs. Like, this is not good. We're in longer term stage 1 right now. Right? So I hope this week, right? This is what, Thursday? Wednesday? Yeah. So by Wednesday, I hope, like, Monday this goes sideways and starts taking off. Tuesday it goes sideways and then maybe starts taking off. And then Wednesday, it just plays around here like this at around like 9:40, and then it reports on probably Wednesday night or Thursday, and then, you know, whatever. Either just keeps going the next day or maybe even gaps up like this. And off we go. We'll see. We'll see what it does. I don't know. It can do anything, but yeah. I'm positioned on this thing now, so I'm just waiting a little bit. All right, guys, listen, I'm gonna wrap this guy up. I gotta go get a little bit better. A little bit out of it today, for sure. But it doesn't change the fact that we'll have a pretty good week, I hope. So thank you so much, guys. All right, listen, guys, thank you so much for showing up today. Thank you all for participating, for the questions and whatnot. I hope the little breakdown and kind of and kind of play-by-play of last week and kind of the action we were looking for, what we were expecting, how price actually delivered. Helped a lot of you guys out. And yeah, I mean, I hope a lot of you were able to make money or learn something from this move here, because this was absolutely beautiful. Right? That's the kind of moves we look for. 1, 2, 1, 2. Now we either explode or we go through our normal turn 1 into 2. Okay, so like a lot of the stuff that's already been on my list is kind of on my list. I'm mainly in an NVIDIA and Bitcoin at the moment, and we'll see how those play out into the week. Hopefully they just take off. We'll see. All right, guys. Thank you so much. I'll see you all. Peace.